Hi, this is Tony Sagami. Hey, I want to talk to you a little bit today about Toyota. They just reported their quarterly results, and they were pretty bad. Toyota reported a $7.7 billion quarterly loss. That's a lot of money to lose in 90 days. What even shocked me more, that's way more than the $5.9 million that bankrupt General Motors reported just a few weeks ago. So I was kind of surprised to hear Toyota's doing even worse. But there was a little bit more bad news behind the scenes. They cut their dividend by 30%. That's the first dividend cut in 15 years. And the other thing that surprised me was that Standard & Poor's cut their credit rating on Toyota debt from AAA to AA. That's also a big surprise. And at the same time, they said that they expected their 2009 sales to drop by another 14% for the year. So business is pretty bad at Toyota. And that's really surprising since it was just a quarter ago that they surpassed GM as the #1 auto producer in the world. And that's a position that General Motors held for the last 77 years. So if Toyota is having trouble, you really need to connect the dots to the other automakers. So there's really two conclusions I take from this news. Number one, Toyota's in the mid-70s. If it gets back to the low 60s, I'd seriously take a look at it because it is the dominant global auto leader, but it's not a buy yet. At the same time, if you took a look at Ford's in the mid-$6 range, that's a sell. As a matter of fact, if you were really aggressive, I think you could take a look at Ford as a very good short candidate too. So what happens across the ocean in the Pacific certainly has some impact on what happens to U.S. stocks too. This is Tony Sagami signing off until next time. Bye.